Hello and welcome to this week's US Stock Market Report. I'm Gillham, Chief Analyst at Wealth Within. This week I'll be discussing 4 steps to building a powerful portfolio, and then I'll dive into the Dow Jones, the S&P 500, Tesla, Apple, and then Alibaba. Now before we jump into the report, I'd just like to mention if you have any thoughts on investing, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into the report. Now, whilst you may think that being successful in the market is about buying and selling, I propose to you that portfolio construction is just as important. So much so that poor portfolio construction will reduce your portfolio returns. There are a number of factors that will affect the way you construct your portfolio. All successful traders have a strong plan for managing portfolios, and so should you. Today I'm going to be sharing with you 4 steps which will help you to construct a powerful portfolio. So whether you're a beginner or an experienced trader, the fundamentals don't change, and having a plan to manage and grow your portfolio will ensure you reap the rewards. The first step to building a powerful portfolio is to understand your why. You see, your why is a major contributor to understanding what you want to achieve from your portfolio. Whether it's generating supplementary income, growing your capital for retirement, or some other reason. Finding your why gives you clarity when it comes to constructing your portfolio. The second thing is active or passive investing. Whether you're trading for short, medium or long term, there is a style of investing that will suit you. Understanding your why helps you decide whether you want to be an active or passive investor. If you're trading to generate more capital come retirement, a passive approach to investing may suit you better. Alternatively, if you're trading for cash flow, you may wish to take a more active approach. Either way, the choice is yours to make. Your choice will also depend on the amount of time that you have to put in. One thing I constantly preach is that trading should be to generate a lifestyle, not make it your lifestyle. The third point I want to bring up is diversification versus diversification. Now this is a concept I introduced in my first book. Portfolio diversification is critical when it comes to building a powerful portfolio. You do not want to have all of your money caught up in one investment, otherwise you become exposed to specific risk. Now specific risk is a direct exposure to the threat of a company collapsing. What you want to do is diversify your portfolio by investing in multiple companies across different sectors and markets so that you're not overexposed to specific risks. Now this raises a question, how many different positions should I have? Now I recommend having between 8 and 12 positions in a portfolio. Any more than 8 to 12 positions puts you into a situation that I call diversification. Now diversification occurs when you have too many positions, and the effect of that on your portfolio is that it erodes your portfolio return. This is the most common thing I find wrong with portfolios. Now this brings us to number 4, which is risk management. Managing risk is the most important factor for building any portfolio. Having a set strategy in place to manage your risk is critical for your long-term success. Now all good traders have a plan to manage risk. On average, 80% of traders lose money investing, 10% break even, and 10% are profitable. This is alarming because it identifies those who do not plan to manage their risk. Now there's a golden rule that says cut your losses short and let your profits run. To easily manage your risk, you should use a stop loss. Now a stop loss is essentially saying if a share falls below X price, I will sell it. Now I recommend setting a stop loss at either 10 to 15% of your initial investment. Successful trading does not come from how much money you make, it's about how much money you do not lose. These 4 simple steps are outlined in my book, Accelerate Your Wealth, and armed with them you can easily manage your own powerful portfolio. If you would like more, you can also purchase a video of a presentation I did called How to Build a Powerful Portfolio from our website, wealthwithin.com.au. Okay, on your screen at this point in time, there is a weekly bar chart of the Dow Jones Index here. And you can see here, last week I did talk about the bar here, how I'll just expand it up a little bit, how it opened on its high, pushed lower, and then came right back up to close in that top third of the bar. And I thought it wouldn't surprise me if it did go up this week, but I did think that the Dow Jones was more bearish. Now, last week, which is the week ending the 4th of May, as you can see there, it did open up higher than it closed the previous week, which was quite interesting. But you can see here how the bar just kept tanking all week long, or earlier on in the week, to go down to a low of 23,531, and that was lower than the preceding week's low. As you can see, the preceding week's low was 23,823. Again, the buyers came back in, or the bulls came back in the latter part of the week to take it right back up to close at 24,262. Now, 24,262 was slightly below the 24,311 that it closed at the week before. So the Dow is bearish. There's no doubt about it in my mind. The Dow is bearish. The bulls keep trying to come back in and taking it higher. So there is indecision in the market because there's a real tussle between the bulls and the bears at this point in time. I still think that we're going to go below that recent low back in April of 23,344, and obviously this low here at 23,360. So it will head below that, and it wouldn't surprise me if it does hit that low or down to that 38.2% level at 22,320. Right now, it really is a case of let's wait and see rather than trying to jump in and trying to scam or not to snag a bargain here. It really is just sit back, wait what's happening. Once the Dow has a direction, you'll see some good stocks falling away in all of that, in those top 30 stocks, and then there should be some good opportunities, but I think it's going to have a washout. It may happen quite quickly, like here was 2 weeks, it just tanked quite quickly. So we might get 1 or 2 weeks that just really fall heavily on the Dow, and I wouldn't surprise me if that happened in the next few weeks. It could do that and then wash out down to that 22,000, and then there'll be some nice buying. So let's go and have a look at some of the stocks. As I said, I want to get into Apple shares. Now, having a look at the screen, Apple's just hit a new all-time high. Now, some really interesting stuff. Let's look at Apple at this point in time. Often people sit back and they go, well, they get into the stocks when they get a new all-time high. Not a bad little theory, because sometimes it's all blue sky from there, but you need to look at how far it's risen in price. Obviously, we had a major low back in Apple back in May 2016. We had one in April 2013, 3 years earlier. And then you've got another major low in January 2009. But you can see here how, June 2011, it's May, June, roughly around those times it's having some lows. So it's heading these beautiful cycles. Right now, it wouldn't surprise me if it does go up. It'll still continue to go up, but how far can it go up? Because it's been going up since May 2016. So my thinking is in the next year, we'll come down into another major low. And generally when stocks do that, it'll be a retracement of somewhere between 15 and 30%. You can see these big moves on Apple. When it does move down well, or it does a decent move down like most stocks do when they come down into their cycle lows. At this point in time, what's going to drive the share price of Apple? It would need to release some new products that are a bit more, not revolutionary like the iPhone and that, but something that's going to boost some sales from that point of view. I want to get on to Alibaba because this is quite interesting. Chinese stocks are really interesting at the moment from a point of view is there's a lot of conjecture around Chinese stocks on the Dow or on the US stock exchange. Looking at this stock to me is Alibaba. It has been a great stock, but it could be in for some trouble. There's a lot of mistrust around Chinese stocks at the moment in the US market because there's been some that have been doing backdoor listing. There's no value in some of those stocks. They're not actually, what they're reporting really isn't what actually they're trading at, and there's already been a few companies in trouble for that in China. There's quite a few Chinese companies actually having floated on the American market, the S&P 500. So just be very, very careful. Alibaba is a big company and it is trading, and it is making money, but it's right now it's a wait and see on this one. It does look bullish on the charts. It really does look nice and bullish on the charts, but I don't know whether you want to trust what's going on. Obviously, Donald Trump is a little bit of friends with the Jack Ma from Alibaba here, so there could be some upside, but just be careful. That's what I'm saying is with China, any Chinese stocks, be quite careful about what you're doing. essentially you need to make sure you're hitting stop losses. You need to be setting stop losses on any Chinese company you have. There is some money to be made here, but just be very, very careful. I want to get into Tesla now, and it's quite interesting. You can see here on the right hand side there on the monthly bar chart. I'll just bring that up and have a bit of a look at it. It's been a little bit hard hit more lately, and it's one of those stocks that people love to talk about. I mean, they love to talk about Elon Musk, and you can see here how it's fallen 37% since the high back here in September 2017. So over the last sort of 8 months, it's fallen nearly 40%. Generally, this happens with stocks. You know, as I said, when they're moving down into cyclic lows, they're going to fall somewhere between 15 and 30%, depending on the length of the cycle low that we're expecting here. Now, I'm in these sorts of reports, I'm really keeping the technical analysis to the high level, so that people can understand it. I don't want to put a lot of stuff on the charts to confuse people. This is an opportunity to me from a point of view is often you see this big sideways movement here on this between 2014 and where it took off in 2017. There's a 3-year period where it went sideways. It's not surprising to me it's come right back down into that, and if we start seeing some strength on Tesla, I think this could be a really good opportunity to pick up a good stock that's going somewhere. Right now we haven't confirmed that the low of the 6th of April at $244.59 is the low. It wouldn't surprise me if it starts breaking through this high here from the 13th of April at $309.50. If it breaks through that, then I would suggest it is starting to move up, and then that high back here that it had in September 2017, 389.61, I think then that would be in danger of being broken. So there could be some really good opportunities here with Tesla. So that's the 3 stocks that I wanted to cover. A bit of a mixture here. Apple's looking great, new all-time highs. Alibaba, be conservative with that. Tesla, have a really good look at that, because that could be a really great opportunity for you. So that's me for the charts for this week. If you do need to ask some questions, or you want me to look at a stock that you want me to do, please send through an email or comment below, and I'm happy to do that for you. Good luck and good trading. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now, they're jam-packed with valuable information which will help you elevate your trading. Now, if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.